Hello, YouTube. Welcome to YBS Capital first and exciting series on the tech sector. We're going to analyze stocks, we're going to analyze tech companies, we're going to analyze tech trends, we're going to analyze startups, we're going to analyze everything tech. What is YBR Capital? We are a venture capital fund, uh, just a bunch of ex Wall Street guys, ex founders coming together, working on this, having a lot of fun in California. And now we decided to do something that we've been asked to do a lot of time by our entrepreneurs, that you have so much knowledge, just share it with us on YouTube, because there's a lot of budding entrepreneurs out there who might like it, and people who are just interested in technology. So here's our first shot at our broadcast. So nothing better than to start with a bang, and thank you, Facebook. So the Q2 earnings are out, and my oh my, wow, there's something. So one day change, $150 billion lost. Old news for everybody. We all heard the crack in the market. Nobody thought this will happen, but whatever goes up must come down, and the day of reckoning of Facebook is here. So what's the story behind the numbers? Let's talk a little about the numbers. If you look at the numbers, they made a lot of money. In Q2, they made $13 billion in revenue. That's more than Q1. That's more than 2017. So why did the stock fall again? What are these people on Wall Street smoking? Well, trust me, people, I've been there, worked there, and they are very smart people, and I'm going to teach you how they look at those numbers. So first of all, let us look at Facebook ad revenue from mobile, because mobile is the main driver. Zuckerberg said that everything is mobile now. It's mobile, social, and awesomeness. So the awesomeness is that Facebook change of ad revenue is just down, down, down. That's now 27%. Top line is growing well, but if you see the rate of change, because that's basically how you determine what the value of the stock is going to be in the future. If this was the other way around, yeah, Facebook would have gone up by 20% in one day, but as you keep losing your momentum, you keep losing your stock momentum too. So that's one thing that Wall Street looked at, and that's why one of the reason the stock fell the way it did. So let's dig a little more, because hey, revenue is still going up. Change is not that bad, but hey, it's a big company now. Yep, you're right. So let's dig a little more. Let's look at daily active users. Whoa, 1.47 billion dollars, billion users. So what's the problem? Well, the problem is the bottom two, US and Europe. Like, whoa, why would I care about US and Europe? They're like 185, 279, but look at the rest of the world. Asia, that's the growth story. Rest of the world, Africa, yeah, Latin America, come on. Well, we'll get there. Hold on your horses. So let's digest what's going on. So if you look at the US numbers all the way in the bottom, Q4 was 185 million users. They've been kind of stuck on that for the last 1 year. So let's be safe to say that Facebook cannot crack the US market anymore, because there's nobody left to crack. They've got everybody on board except the young folks who will prefer to be on Yammer, Hush, Snapchat, and other cooler places than where mommy and daddy are. Same thing in Europe. Almost a year of stagnant growth. Mommy and daddy ain't cool, so more kiddies go somewhere else. And Mr. Zuckerberg can't figure out what the hell to do about that. But hey, look at that. Asia, wow. That's like more than US and Europe combined. So what's the problem? Well, as I said, the devil lies in the detail, and just because you make top line revenue doesn't mean it's going to keep on going, even though you have all these folks coming in. So let us dig even deeper. This is like Inception, dream within a dream within a dream. So let's go one more step. And the real answer lies in ARPU, average revenue per user. Every SaaS company well, Facebook is not SaaS, but every SaaS entrepreneur that's out there, ARPU is what he lives and breathes by. So, young budding entrepreneur, when you're ready for monetization and you come to VCs like us, ARPU is something you want to talk about. All right, so let's talk about Facebook ARPU. So, let's talk about US and Canada. So, $25.91. What does that mean? That means that every user who is a US or a Canadian resident, not a citizen, a resident, an account in US or Canada, can generate for Facebook almost $26. Okay? I'll let you digest that. $26 per user in US and Canada. That's a lot of money. In Asia, where the growth is, let us look at that. In Q2, they were able to squeeze out $2.6. That is basically 1/10 of what they can get in the US. So now you know the reason is that in order to compensate for a loss of one user in Canada and US, they have to get almost 10 to 11 people in Asia. That is no easy, mean feat. Why? One, China ain't happening. They got that office for a day closed down. So forget about China. That 300 million users ain't happening. So where's the growth gonna come from? There's structural issues. So in India, the next biggest market that out there, they've got a good penetration. WhatsApp is leading it, but there's structural issues. So if you think Facebook and Reliance Communication are just magnanimous folks who are investing billions of dollars in infrastructure there via Geo Mobile and giving out free internet, that's the reason they want those numbers to come pop over here so they can show how many new people are coming in. So they need at least 10 Indian guys to sign up on Facebook via Geo for free, and then they can compensate that loss and keep on showing that growth. So here is the story, ladies and gentlemen. The real story behind Facebook is they are stagnated in US and Europe. Their margins are gonna go down, and just because they're growing in Asia and rest of the world, that cannot compensate for the revenue loss. So what's going on are going to happen? Well, consolidation in social media sector. So as you can see, this is the basically the top usage of apps, social apps in the US: Facebook, WhatsApp, YouTube, Snap. Now, the blue ocean strategy of capturing as much territory as possible is over. So now it's going to be all out war. So, Snapchat, Twitter, YouTube, watch out. Facebook is coming. They've got money, but the thing is, it's a margins game. So now that you are going to get users from other platforms, you have to spend more money. So that margin of 45%, you have to spend more money. That's why they said our margin is going to go down to 30%, 15%, and then, to maybe Intel, GE, boring level of 5%, who knows. But that's the trend. So you'll be like, hey, so if Facebook and Twitter fell by 20%, it must be a buying opportunity. And if not, then maybe I should go buy other social media sectors. So whoa, 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 hold your horses. Let me talk about that before you start hit that buy button on something else. So as you can see, Facebook and Twitter basically capture 85% of all the money spent on ads. So if the top guys cannot perform, then the smaller guys with smaller guns, with smaller margins, a smaller sales force cannot perform as well. So social media as a whole sector is basically going to hit the brakes. So just because Facebook and Twitter are no longer a good investment doesn't mean you should go invest in social media other stocks, because they're not losing ground. There's basically no more ground to capture. So let's talk about the future of the stock. Well, I and at my folks at YBR think it's gonna be slow growth. Welcome to the real world, Facebook. It's time for you to actually be responsible for your content, responsible for your platform, and be able to justify why you should get that higher valuation. Because till now, if I invested $10,000 or $100,000 in Facebook, my return will be nada, zero. So, Facebook as a growth engine, as a engine of economic growth, money multiplier is over. It's going to be slow growth. It's going to be a long slog. And in this kind of environment where all guns are trained on Facebook, I don't think I'll be investing in this anytime soon. So that's our analysis of Facebook. I hope you liked what you hear and you will continue to watch our broadcast. Click like if you like this, subscribe to our channel, comment below, let us know what kind of new shows you would like to watch, what kind of topics you want us to talk about, any stocks you want to watch. So thank you again for watching us channels. Click like and subscribe. Bye bye.